Left Terrace Acquisition CEO, former CEO of E-Trade. Carl, great to have you this morning. You know, as somebody who ran one of these platforms, E-Trade, which obviously owned by Morgan Stanley now and benefited from this new cohort that we've all seen, I guess, in the marketplace for about a year now or so, what are your thoughts in terms of whether they're going to have staying power, particularly as they continue to participate in certain corners of speculation in the market that eventually may not end well?
So thanks, David. I do agree with you that this is not going to end well. I think historically we've seen this in the past, but I do believe this group has staying power, right? Did anyone expect that following what we saw in January and then where these stocks went to and what had happened, that we'd see a return, of the meme to the extent that we have, particularly with AMC and what's gone on in that stock. So I do believe that this group has some trading power. It has some staying power. I think the availability of the platforms that are out there in the space, the social tools that are now available to all of these traders, the way that they can follow one another, copy trades, and really dig into some of these companies and some of the ideas that are brought forward. I think that they're powerful tools. So I do believe these folks are here to stay.
Yeah. I know for a fact that you and I have at least sons the same age. We go way back from baseball, but, they're doing this stuff, Carl. They're out there in college. They're trading this stuff on their phone all the time. I don't know that they have a clue, frankly. And I'm just curious as to your experience and how important education ultimately will be in keeping this cohort sort of involved.
So David, it's funny that you mentioned that. So I've tried with both of my sons, right? They have E-Trade accounts, and trying to teach them some of the fundamentals and why some companies do what they do and where they are. And of course, they keep hitting me as to, why don't we own any Dogecoin, right? Or why don't we get involved with one of these meme stocks? And I always bring it back to fundamentals, right? And then they hear from their friends that they just made $10,000 on Dogecoin and they're going to take the rest of the summer off, right? So how do you combat that? And how do you sort of talk through that with these individuals who now have access? The bar has been lowered in such a way that they really can get involved with stocks at an early age, or they learn how to do these things. So I go back to fundamentals of education, right? Financial literacy. How do you budget? When you make money, what happens to your money? What are the tax implications? How do you have a, sort of an emergency fund, a save for a rainy day fund? What amount of money can you actually afford to lose, right? Because when you look at what they're doing in some of these shares today, or some of the cryptos that are available to them, that has to be completely risk capital, right? So I keep bringing it back to education. And there are some great platforms, some great apps that are out in the marketplace, and then some great groups. And I know, CNBC and some of the contributors are involved in some of those that really bear on, economics and how do you get involved and what does it mean when you're investing in a company, and how do you evaluate a company from the ground up, right? What is that company actually worth? And then, what's at risk? What amount can I afford to just roll the dice on some of these stocks that are taking off for no reason other than social media?
Carl, it's Morgan. I mean, you're talking about financial literacy and education. I mean, that is what we strive to do on a daily basis at CNBC. So I think we're all on board here with that commentary. That being said, when you say it's not going to end well, how do you know? I mean, are there other events or other examples that are similar in history that lead you to that conclusion? I mean, we know from trading in general, whether you're a professional or not, there's winners and losers on the side of every trade.
Yeah, and when I say it's not going to end well, I'm speaking specifically about, some of the meme stocks. So when I look, take AMC, for example, and you see even the capital infusion that they had this morning, I applaud the management team because they opportunistically raised those funds to help them with some of the intrinsic, issues that they have, both on their balance sheet, and with their business model. But when you look at what that company is based on, the industry that it's in, right, absent some serious strategic undertakings by that company, it's still just not worth what it's trading for right now, right? When you look at it from a fundamental analysis standpoint, and you look at, any of the metrics that you would use to take a look and evaluate a company. So what I worry about, and what I say it's not going to end well, I always worry about the last retail trader who's left holding the bag when the music stops, right? That's historically what we've seen. If you look back to the internet bubble, if you look at the financial crisis that we had in 08 and 09, there were always those retail traders who were either late to the party or tried to grab on at the end of the rally, right? When these things were just coming to pass. And we've seen that, a ton of times historically. So that's why, when I say if you want to be involved in these types of companies and you want to lay that kind of capital on the line, just make sure that it's risk capital, right? You know what you just put forward, and you can afford to lose everything you just invested, because there is a chance that's going to happen in the stock market.
Shepard Smith here. Thanks for watching CNBC on YouTube.